while Miriam is driving us in our ET5 to a restaurant, I want to say a couple of words around NIO stock performance and the question whether or not NIO actually cares about it. Because sometimes I hear that like NIO is only at the stock market in order to milk investors and do whatever they like. But I want to argue why I think NIO should actually care about the stock price and why I think they actually do. But of course the reason is why I'm saying this, that NIO stock is trading at a ridiculous valuation, at least when you compare it to competitors. And at this point you can't even argue on a fundamental basis that much anymore. Like if you see at the weeklies or the recent sales, you cannot say anymore like NIO is trading lower than XPeng or Li Auto just because they have lower sales. No, NIO has already recovered in sales, right? And if we think about valuation multiples, then NIO is trading lower than its peers. And also when you talk about absolute market capitalization, well, it may make sense to say that Li Auto should trade higher right now given it's in a better financial situation. However, XPeng selling fewer cars, having negative margins, and also not the greatest cash situation, financial situation at all. Doesn't make sense that this is almost close to the market capitalization of NIO there, right? And so I do see this as a valid concern why investors are sort of angry at this situation or think it's unfair and unreasonable. And the question is, why is this so beaten down, and whether or not the company is actually caring about it. And I would argue there are several reasons why they should care around it. Number one is, I think the stock price has also implications on the reputation of the company. So sometimes you see those headlines out there in the media, in the financial media, but sometimes also in the regular media, how the stock price has collapsed, or how the company is not doing well on a fundamental side in terms of sales and something like that. So I think that's certainly one point that they are watching in terms of PR and also from a management point of sight, because ultimately this could spill over into how NIO as a company is seen. And that of course relates to the fact as well that NIO owners oftentimes are also invested in the company. And I would also frame this in the other way around and saying that actually the stock presents an opportunity for NIO in terms of that stock investors that are doing well might actually to opt and buy the product in the future, right? So here's another incentive for NIO management, simply on the basis of wanting to generate more sales. They want to have the stock price doing really well, because in case similar to what happened with Tesla, people are doing a remarkable amount of their investments, they may opt to buy the car. That has happened in many cases for Tesla investors. The next point why I think it makes a lot of sense that NIO is actually caring about this is just the leadership, Li Bin. So he is one of the largest holders, stockholders, and that's also the great news about founder-driven businesses. Not only do they have a strong vision and the endurance and are committed, but also of course in case the stock is going down, his personal net worth is also suffering in a big way. So there are some personal reasons why Li Bin should be interested in the stock actually performing well. Well, you may argue that of course he's a billionaire and maybe he's got other ways of staying liquid or being rich, or he possibly even doesn't need all of that money, but still he would also benefit like more than everybody else when the stock price would be doing well. The next reason why I think NIO is watching and should care about the stock is actually about building a global reputation, right? So NIO is listed at many different stock exchanges, and that is also helping to building a brand and global awareness about the company. No small company that is not listed on the stock exchanges can ever build a global audience, and NIO certainly strives to have this global target group, as the product is certainly geared towards this. So I think this is another reason why they should care to manage the stock ultimately in a way and try to improve this lagging performance against competitors right now, which might be unfair, which might be unreasonable, where there might be many different reasons why this is the case that can't be influenced. However, it's a fact that this is currently the case. The next reason, and we are almost at our restaurant, I think, is a very important one, I guess, which is about the employees. Because in many cases, the employees are actually owning the stock, and they could quickly become demotivated if parts of their salary is actually in stock. So usually a startup doesn't have that much funding to pay the highest wages in the industry, and that's why they also issue shares to the employees. And if they see that the stock is going nowhere, obviously they will become demotivated. They might want to work for another company, or in a result, NIO might actually fail to attract good talent because, you know, they don't offer the salary, and then they see the stock is not going anywhere. It's difficult to find the right incentives for these employees to stay with the company or start with the company. And then last but not least, and the most obvious one, I think it's about financing, right? I mean, of course, this is also the prejudice that NIO is only on the stock market to tap into the market and raise dollar funds in order to expand the business, which partly is the case. And of course, dilution and raising money is always the case for startups, and should be kind of, you know, if you're investing in NIO, you should kind of presume that this, or accept and anticipate that this is going to happen. But anyways, it could also go the other way around, like with the recent case where NIO raised at all-time lows and, you know, diluted shareholders around 5% and raised the last round. You know, in case that the stock should deteriorate even further, it might actually become impossible for the company to raise the funds which they need. Because, just an example, if they would have waited 2 more weeks, yes, only around 2 more weeks, they could have raised double the amount in cash. So let's say building another 1,000 swap stations with that money, or you know, diluted the shareholders only by half of the amount, just because the stock was up to 15 USD versus 8 USD at which they raised. And so, you know, this is also why NIO management and the company should actually care around the stock price a lot, because it might actually have very direct implications on the survival and the future of the company. Maybe there are other financing options which they can tap into. Maybe they don't need the stock market in the future, or maybe they don't even need it anymore at all. You know, this could always be possible. But still, in case that the stock market or the stock price is collapsing, that might leave them with no option, and that might actually have very severe consequences for NIO stock and the company ultimately. So I guess I gave you a couple of reasons why it's the case that NIO, I think, should carefully assess the reasons why the stock is not doing well currently. Some of it might be out of reach to change, but some of it certainly must be in their hands, and there might be changes that could help to recover the stock. And there might be ways to better deal with this situation right now, given that some competitors are actually doing quite well. Some of them, like I just named, like Xiaopeng, who are doing quite well, despite the fact that the fundamentals are not looking any better, and it's still a Chinese company, it's still a risk asset, and so on and so forth. So let me know in the comments what you personally think about it. I hope that was a fruitful opener for a discussion in the comment sections. Let me know your views, and then thanks for watching, and see you in my next video.